I'm happy to talk with you afterwards to talk about our risk model, because again, we're talking about appropriate collateral for different markets. And that's not just saying, no, you can't do a trade, we'll make it 5 times the cost. It's actually doing it with a much more innovative way of providing the instrument to you at a reasonable price to do business. So happy to take that offline. The other thing really interesting is your comment about everybody says no, immediately you mention Africa, whatever. One thing I'm a great advocate of, and I hope you are as well, is that the rating systems which are currently used for banks and financial organisations are creating a real problem, not just for Uganda, but for every country in Africa. There is no African bank in the top 100 banks in the world. The first bank that appears is number 154, which is Standard Bank. 150. 154 is ABSA. After that is way down. There are 850 banks in Africa. There are 42 central banks, 46 currencies. There are 2,000 languages spoken. So it's not surprising that there are issues with anybody wanting to invest is saying, where do I go? How do I do this? I was in Rwanda recently and we talked with the government there about a new Project 54, connecting the 54 countries of Africa's central banks. So we get standardization, reusability, harmonization of the way things work, movement of payments that much easier. And again, we've discussed that. I was in Namibia with the Commonwealth Heads of State meeting, and following that at the Zambia meeting. And the same question comes up. Ratings. We're not rated by Moody, not rated by Fitch. What we need is a way to have a rating which truly reflects each country's aspect of its major banks in its own jurisdiction and economy, so that you can be viewed in a different way that not only makes sense to the whole of the continent, but to every other bank worldwide as well.